Alright, so today I'm going to explain you how to post in trial balance and to post the T counts and then calculate trial balance. So we had the homework to work on processing the trial balance for the fashion shop, and I gave you a list of transactions which you can see on the left, right? So we have a list of 14 transactions, and I already created the T count for all the transactions, and I created a format of trial balance, and now we're going to post them one by one. Now, in our previous lessons, we were talking about the cash transactions, so all the cash transactions, I'm going to put it under bank. So, right, just not to confuse it. For you guys, you have to just to remember that the bank transactions are posted under, or let's say the cash transactions will be posted under bank, right? So let's start. Let's start then, right? Now we have the first transaction is the advertising. We said that advertising is an expense, right? So since the advertising is an expense, right? We have here the account of advertising, an expense. The expenses are going to always go under the debit account. So we have bank 1,250, and then we also, because we are working with a double entry, we are going to post under the credit under the bank account for advertising 1,250. Now, you must ask yourself what exactly are these accounts called: purchases, receivables, and so on and so forth, right? So, for you to understand all the some of the assets are going to go under the receivable account. So, for example, the sales on credit are passed through the receivables account, right? And they're going to go on the debit account in a bank, and are going to be posted here under receivables. And then we are going to have the payable accounts are always are going to be under the credit accounts for acquisition of goods, and the payment of goods are going to be in debit, right? So basically, purchases in credit are going to be under payable, and payment of debit are going to be under payable, right? Now, let's continue. So we said the advertising 1,250 is under the debit in the advertising T account, and under credit in bank account, cash account. And then the next transaction, we said that the company paid 18,000 to suppliers of goods on credit, right? So if the company paid on goods for on credit, we say that in this case we paid 18,000, right? Paid on credit. So we have the payable accounts, right? It's going to be 18,000 in debits, and then we have the bank, right? 18,000. Then We also said that the first credit transaction, cash received from credit customers in an amount of 15,000, right? So in this case, we're going to have 15,000 placed under the receivable because these are money received, right? So we have 15,000 and receivables. We said we're going to place them under the credit, 15,000, and then under the bank accounts they're going to go under the debits. 15,000, right? And then we also said that because there's some money that goes in, right? And the third transaction says that the fashion shop purchased a computer. So a computer is an asset. A computer is a long-term asset, right? So it can become a capital before. So we have account for computer, right? Obviously, it's an expense, right? So we put computer purchased by cash, 2,250, and of course we put it here, computer, 2,250. And then we said that the company paid electricity during the year 1,100, and we have the electricity here. So obviously it's an expense, so we have 1,100, and we have here the electricity. And then we also said that we have goods purchased during the year for cash for an amount of 62,000. So we spent basically 62,000. We purchased goods, right? So the money went out from our bank account, right? Purchases, right? We purchased goods in cash for 62,000, and of course under the purchases, where is our purchases account? Here. Bank. These are the goods for cash, 62,000. And then we said that we purchased goods in credit during the year for 19,500, right? We said it's a credit, so it's a payable account, right? And obviously we have 19,000 here, which purchases 19,500. We purchased on credit, and we said in this case under the purchases we are going to have we purchased payable, we have a payable account, right? 19,500, right? Because this 19,500 are stocks, right? But we purchased them on credit. The difference between this and this is that this one is purchased for cash and this is purchased on credit, right? And then we said next that we sold goods during the year for cash. So we have the sales account. So we sold for cash, which means that we have a revenue, right? Sales are normally revenues, right? So we have So money went in here, sales, right? And we sold for cash for 125,000. Okay. And we also said that we obviously credited our account with 125,000. And then we also said that we sold on credit, right? So we sold on credit, which means that we're going to later we receive the money, right? So we sold on credit. And we said that we sold on credit, so that means that we have a receivable account here, right, for 17,500. Then we also said that the owner, right, paid into bank to start a business 57,000, which means that he included, like this is the capital, the startup capital, right? So obviously our bank account or cash account is credited with a capital of 57,000 bank. 57,000, and of course we have a capital account which is going to be credited with 57,000 bank cash, right? And we still have this part which we did not fill in, right? Now we purchased we paid for a cash register in cash, right? We have two transactions that have the same amount, and that might actually be very confusing for you, but we paid in cash for the cash register, right? So we paid in cash, the money went out, right? So we paid in cash 3,250 payable, right? We paid for the asset by 3,150. And then we have the payable account. What is our payable account? Cash register. And then we said that we purchased on credit. Right, and then we have the situation where we bought a motor vehicle. A motor vehicle is an asset, right? So it's a long-term asset, right? So we say that we debited our account with 12,500. We paid in cash. So motor vehicle. And then we also have the situation where we paid rent during the year. So we have the rent account here. We paid 25,000 for the rent. And obviously we paid a bank account in cash. So we have the rent 25,000. And then we paid for our telephone line in cash from our bank account 150. Obviously it's and we credited 750 telephone. And then we have the last transactions. We have paid wages, right? So we paid wages. We have the wages account. We paid cash wages, and then obviously we credit our account with wages. Wages. 45,000. Alright, so we finalized with the first stage. We posted all our transactions in the T counts. And now what we have to do is we have to calculate the subtotals, right? So what I'm going to do now, I'm going to use the feature of the Excel, and I'm going to add it one by one. So let's assume that you have the same situation where you simply have to calculate with your calculator or manually, whatever you prefer to. So I'm going to simply add them. So you have to add them all, right? And we have 171,100. Then we have to add this left side. Okay, so you can see that on the left side we have 197,000. On the left side we have the credit accounts in cash, 171,000. So the difference between them, so we basically had 97,000 minus 171,100, and we have 25,900. We calculated this one as well. We don't have any other transactions, and whatever is bigger between these two sides, this is where we put the balance here, right? So we just leave it like this: 1,250, 3,250, 12,500 for the motor vehicle, 25,000 for the rent, 2,250 here, 1,100 for the electricity, 750 for the telephone, 45,000 for wages, capital 57,000 stays on the right side, and then we have the sales here, which is going to be 125 plus 17,500, and that's 142,500. Then we have here the payable transactions to calculate, and we are going to add them. So 21,250 on the right side, 22,750 on the credits, so it's 1,500, and because this side is bigger than this side, we put the 1,500 on the right side. Now here we only have to minus, right, done. So 2,500. So we posted all our transactions. Let's check one more time. 750, 25,000, yeah. Now we can post all our transactions here, right? And we are going to take it one by one. I'm going to post them the way they come in the way they would look like credits and debits, right? So let's do it. So we have advertising, then we have bank. So we have advertising, debit, advertising 1,250. Then we have the bank account, the balance is 25,900. Then we have the cash register with 3,250, right? And then we have computer with 2,250, and then we have electricity, and we spend for electricity 1,100, and then we have the motor vehicle, and we spend 12,500 for it. And then we have the capital, which goes under credit with 57,000. And then we have the payable account, which will go under credit as well with 1,500. And then we have purchases, with 81,500, and then we have receivables, $2,500, right? And then of course we have the revenue or the sales, which is going to be under credit as well with 142,500, right? And then we have the telephone, which is also an expense, telephone. And we have the wages. So both of them are going under the debit transactions. So we spent 750 for the telephone, and we have 45,000 for the wages. Right? Now we have to calculate the balance. Okay. So I'm going to go one by one. Again, I'm going to add it in a very easy way. Just step by step for you guys to understand. I think I forgot to post one of the transactions. So it gives me less. Oh yeah, I forgot to put rent here, which is 25,000. so I forgot to put, you have to be very careful. I'm gonna put the rent here. And then for the credit transactions, let's see if everything is accordingly. Yeah, so we can see that our debit is equal to credit, which means that we have no mistakes in our T account, and we are pretty much okay with it. Thank you very much.